Morning. Good afternoon. Hope you're all well. Hope you traded the FOMC last night or early this morning reasonably well. It was a bit of a down, up, and then big down kind of session from the FOMC last night, early this morning. So hope you all traded well on that. Hey, Chuku, how are you doing? Good morning. Hey, Jumarinas, good morning. How are you doing? Thanks for that, Jumarinas. Hey, Jimmy. Good call on the gold from the day before, not yesterday, the day before. So we're back. We did not have a session yesterday, so if you're wondering, where was the stream yesterday? It was Labor Day yesterday, so did not have a stream yesterday. Didn't even look at the charts at all through the day. Well, it's a bit of a day off kind of session for me. Hey, Angel Case, how are you doing? Good morning. We'll give it a minute and then we'll get started. In the meantime, if you are new to the session, again, do remember to drop a message and say hi. Let me know where you're joining us from. And for all the regulars, a big welcome back. Thank you again for joining me. Again, do drop a message and say hi as well. Just want to see who's on the session. And if you can help me out massively, do remember to click that like and subscribe button. That thumbs up supposedly does help a lot, so you can help me with that. What was I going to say? Oh, and if you have any questions at any point in time, please feel free to put in the chat and let me know. And let me know how you went with the FOMC last night. The lack of a decision from the FOMC, but a lot being said, right? Hey, Lindy, how are you doing? Okay, so with that said, a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence, as the contents of this webinar are not intended to be a recommendation to a financial product, as your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. With that said, take that away. Hey Neymar, how are you doing? Okay, so what has happened? What has happened since the last time we spoke? No session yesterday, so we'll go through that. Hey Christina, good afternoon. So on Tuesday we had our session. Tuesday night we had the Canadian GDP month on month. It was a 0.6, expected to be a 0.3, got revised downwards to a 0.5. It got released at a 0.2. So as we expected, it came out worse than, as we expected, it came out worse than expected. As we expected, it came out worse than forecast, and it moved as we had kind of thought, right? I'll go to the usdcad, right? So this was on Tuesday night. We were looking for it to break to the upside, to trade up towards the resistance. So it did that exactly. That was a good 55 pip move to the upside. Anyone caught that, let me know. usdcad, as much as I analyze that, and I have good fun, relative fun, analyzing the usdcad, not high on my trading list. So if you got into that, let me know. 55 pips to the upside for the usdcad because of the GDP number that we saw on Tuesday night. Right, following on from that, we had a couple of employment numbers for the US, didn't pay too much attention to that. And then through to yesterday, we had Kiwi employment numbers. Not a big surprise, not as big a surprise as I had expected. 6:45 a.m. GMT +8. We did see employment change quarter on quarter for the Kiwis. 0.4 to expected 0.3, come out at a minus 0.2, with unemployment rate climbing slightly to 4.3% from 4%. So Employment numbers do look a little bit worse in New Zealand, but not as big or as bad as we had expected. With that on the Kiwi, right? This was where was it? Wednesday morning. We did see that drop. So zoom in a bit. We did see on release of the news at 6:45 or 6:30 a.m. 6:45, we did see it drop to the downside there on the Kiwi. So that again moved as we had expected on Tuesday. We spoke about this, breaking that trend line to the downside. This one I did get into, but I closed out a lot earlier. I closed out at that point. No, a bit lower. Bollinger. I closed out at that point there, right? Towards the, no. Yeah, that point there. I had my take profit slightly lower from that 61.8 level. I think, if I'm not wrong, it was in that point, that low there that I closed out on the trade. So I had about a 30 pip. That's about right, a 30 pip. Or was it a 30 pip take profit hit on the Kiwi for the downside? So again, we had very good calls on the other pairs, on most of the pairs on Tuesday. So let me know how you went on our analysis and our calls on Tuesday. Kiwi was hit. Then following from that, a whole, I didn't even look at the markets during that period, whole quiet time during the period yesterday because of Labor Day. So yes, thanks for that, Neymar. I had a very good day off with the family. Hey Jamil, how you doing? Today, Jamil also had a withdrawal, sent it to the broker. Fantastic. Hey Mohammed Hussein, good to see you. How are you doing? All right, so that was Labor Day break for, if I'm not wrong, yeah, Labor Day for the Italians, the Germans, the French, the Swiss, and the Chinese as well, all right? And in Singapore as well for me. Then following from that, we had at 8:15, did not trade that ADP, non-farm employment change for the US. It was 184K, revised up to 208. Expected 179, came in at 192. Then manufacturing PMI stayed about that, climbed slightly to 50, borderline, not too worried about that. ISM manufacturing PMI dropped down to 49, so it's in that contractionary phase. I pay a bit more attention to the ISM number. And then jobs openings, JOLTS jobs openings, 8.81 down to 8.49, a slight slowdown, not big, but a slight slowdown, okay? Or that, if I were trading, if I were looking at or any of these news, I would not have bothered too much in the overall scheme of things. I would not have bothered too much because what we had, this was at 8:15 and 10 o'clock. All that news good came out, pretty much borderline, no big surprises there. But what we had after that at 2 a.m., late last night, early this morning for me, the US Fed funds rate. Fed funds rate, which is the interest rate decision for the US, kept at 5.5%, right? They kept rates on hold at 5.5%. They released the statement, which I'll show it to you shortly, and also had a press conference, which I'll show you some of the headlines shortly, okay? At this period, during this period at 2 a.m., what we saw on the dollar was 2 a.m. was right here. It was at 106.20, 106.24, 106.24, 106.25. Within, if we went down to the smaller time frame, should I do that? Yes, okay. Oh, pardon me. Where was it? 2 a.m. was right there. Okay. So 106.24 within the first minute. Right, within the first minute, it went straight down from 106.24 down to 106.17, as low 4 minutes, 5 minutes went as low as 106.05, bounced, and then a big continuation down. You see a continuation down was during the press conference at 2:30, right? So those of you who attended my session with Tickmill, where I was teaching how to trade a news event, you will notice that same pattern where it came down, bounced back up, and then came right back down again. In fact, more specifically, it came down, bounced, came to this same level, bounced, and then came back down. Right, so the pattern is there. The pattern is there. If you were looking to get into a trade on this move, you could either look for the turning point at about there, or for when it broke below that low to the downside. Right, if the dollar index was something that you would be able to trade, that's the kind of pattern we were looking for, and it happened pretty much as we usually experience. Okay, thanks for that, Mohammed Hussein. Appreciate that, and also with your withdrawal, fantastic. Okay, so that was what happened on the. Bring that back. Okay, that first move within that hour. The dollar index went from 106.24 down to 105.70 at 3 a.m. bounced back up slightly, and then came right back down to 105.43, bounced back up slightly, and it's sitting right now at 105.67. Okay, so why? Let me ask you all a question. Let's get this a little bit more interactive instead of me just rambling on for an hour. Why did not change rates? Fed Reserve did not change rates, kept it at 5.5%. Chair Powell pretty much said we're not looking at cutting rates anytime soon. We're still waiting. We still want to see what's going to happen. So why did the dollar weaken? Why did it drop down to 105.70? Bounced back up, and then after the press conference went straight down to 105.45 and sat there. Apart from it being way out of the Bollinger, right? This dropped right out of Bollinger. This is where you would know it's going to bounce back up. Came right back down, out of the Bollinger again, came right back in again. So apart from the technical analysis side, do you know why we saw the dollar weaken? Okay, Jimmy with the answer from about the BOJ, intervention from the BOJ. Could be one reason. Another thing? Anything else? Anyone else? I'll give you a moment to put that in while I update this. We're in May already. Where has the time gone? We're in May. Anyone else with an idea on why we saw the dollar weaken that much? Stock market, yes, Lawrence, it's one of the other possibilities. Okay, so it came down to, if you read the statement, if you clicked on that, hey Diana, how are you doing? If you read the statement, basically what it said, let me make sure it's the right step. Okay, basically they kept rates on hold, economic activity continue to expand at a solid pace, all that we know, jobs gains have remained strong, lack of further progress towards the 2% inflation objective, we know that. The main thing that has, from my view, has triggered that big drop in the dollar, right? The big weakening in the dollar is that line here. Beginning in June, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on treasury securities from 60 billion to 25 billion, right? So they're slowing down quantitative tightening, right? There were quantitative easing back in during the GFC time. They're printing money, they're buying, or they're printing money and putting it into the markets. They're buying bonds, they were pumping money to the market. now they're into tightening. They were buying back 60 billion of treasury securities every month. Now they have reduced it, or beginning in June, they will reduce it down to 25. So they're buying less, right? They'll be buying less treasury securities beginning in June. And when you think about buying less, or the reducing on quantitative tightening, right? That essentially, I'm just looking at my notes here, that essentially means like it's a bit of a less aggressive approach to monetary policy, to tightening the monetary policy. Almost like hiking rates, but not exactly. Okay, it's viewed as a dovish signal because they're reducing their tightening as dovish. Rate hikes are less likely. They did talk about, they're not even considering rate hikes, so rate hikes are less likely to occur, and then that actually pushes out the rate cut scenario as well. So cutting back on treasury, weakening, or being seen as a dovish view from the markets, leading to the drop in the dollar index. So that was my view on why we saw that drop, right, from the statement, because this is all from the statement. Show it to you on a 15-minute time frame. There, once it came out, that first drop was all from the statement. During the press conference, we see it push back up, and then after the press conference, we see it come back down. Again, didn't say anything new, but the plan is to reduce on treasury buybacks to 25 billion, and that's why we see it pushing right back down again. Okay, so that's why we're seeing that move down on the dollar index. Make sense so far? It's raining. Hey Dinah, I hope it rains reasonably. Hope it rains reasonably in Dubai. What about the new approval for Ukraine? I haven't seen that news about new approval for Ukraine recently. I haven't seen that news. So I will have to look into it. I haven't seen that, so I didn't factor that part in. Okay. Yes. So what we had from Tuesday was that we said it was going to bounce around here and push up towards that resistance. It did that, and then on Wednesday we saw it crashing right back down again. I'll take away these squiggly lines as that's done already. And then during the press conference, right? Press conference, there were a lot of headlines that were shared. I actually tabulated some of the key ones that I want to share with you guys. I hope you can see it all right. I think you can see it. Is that too small? You can see that okay? Let me see. Okay, that should be fine. All right. So, main headliners coming from the press conference. Again, I did not trade this news event. It was not a trading day for me. Main headliner from the press conference from Chair Powell was that they're not satisfied with a 3% inflation. It's currently about 3-point-something%. They're not satisfied with 3%. They want to get it to 2%. Restrictive monetary policy needs more time to do its job. So they're again pushing out of that expectation that they're going to cut rates soon. So it's going to take more time. The signal that we're taking is that it will take longer, again, more time to get to 2%. So this, where am I? Okay, this covers this too, right? Not satisfied with 3, take more time. So they say it could take more time to get to 2%. December, we had higher goods and housing inflation than expected. Expectation is that we will see inflation move back down this year. Towards the end of the year, they're going to see inflation move back down. We need to take a signal from 3 worse than expected inflation readings. So it's not going to be the next time they see an inflation number being lower than expected, and they go, oh, right, great, I'm going to start cutting rates now. They want to see at least 3 worse than expected inflation readings before they really start thinking about cutting rates. Chair Powell says we'll get confidence in inflation rate cuts will be in scope. And then also, if wage increase runs higher than productivity, there will be inflationary pressures. Again, this is why, if you remember through the last few NFPs, I haven't focused too much on the number, but I've always looked at the wage inflation number, because wage inflation is going to be one of the drivers that cause inflation, to one of the drivers that could impact on the overall inflation growth or slowdown. Interestingly enough, they are looking for a rise in unemployment, right? It would have to be meaningful for us to react. A rise in unemployment would have to be meaningful for us to react. And the signal we're taking is that it will take longer to get on a sustainable path to 2%, and this one we've had already. My expectation is that we'll see inflation move back down this year, but possibly later into the year, right? So he is dragging out the view of a rate cut scenario. And I couldn't find that line where I read it just then, but I just couldn't find it again. There were for some reasons, some discussions or rumors that, hey, if inflation is not slowing down as they had expected, could the FOMC be looking at a rate hike scenario, right? Could they be looking at a rate hike scenario? This was on 30th of April. We had a 0.1% chance of a rate hike to come in the June meeting. Right now it's dropped down to 0. It's staying at a current rate at 88.2%, while a cut is at 11.8%. If you look into July and into September, then we get back into what we were looking at the start of the year, right? Relatively low chance of or relatively higher chance of a rate cut scenario since from September onwards into November and December, right? So timeline now seems to have been pushed out towards September, November, December. There was talk from, I can't remember which bank or institution now, that they were still thinking that the FOMC could cut rates 3 times, maybe September, November, December. If they did it twice, maybe September and November, or maybe September, December. All right, so it's pushed out. In June and July, well, look at that, it's just changed. So June is now a 91.1% chance that you'll keep it on hold. We didn't kind of expected that. July is relatively skewed towards keeping it on hold, but still a chance for a rate cut. I think it's back down to September, November, December. Okay, so that was what happened with the Fed funds rate decision, kept on hold at 5.5%. FOMC statement was the headliner, or the big thing to pay attention to was the slowdown in quantitative tightening from 60 billion to 25 billion a month, a slowdown, which can be viewed as a dovish move from the FOMC. And then the press conference was conveying the view that they're not happy with 3%. They want to see it get to 2% sustainably. They want to see at least three worse than expected inflation numbers. And then also that possibly we're looking towards the end of the year for the rate cut scenarios to come back into play. Okay, then that's it. That's what has happened since the last time we spoke. This morning we had some monetary policy meeting minutes from the BOJ, didn't do too much. We are seeing the yen continue to the downside. We just had at 2:30 p.m. the Swiss CPI number month to month, climbing slightly from 0 to 0.3%, right? So inflation growth for the Swiss climbing slightly to 0.3, but it's a month-to-month number. We didn't see too much of an impact there. On the Swiss, this was at 2. In fact, we saw it strengthen and then it sat there, pushing down because of what's happened on the dollar. So the dollar pushed down at 2, so the Swiss as well pushed lower. Okay, and then through to tonight, we have unemployment claims from the US. I don't think it's going to do too much. Again, a weekly number. Governor McCallum speaking from the Bank of Canada. Not too concerned about that. I think that today might be a bit of a retracement or consolidation session looking for a continuation. So it's retracing, or it's retraced slightly. It's consolidating, but we're looking for continuation because tomorrow we do have the US average hourly earnings, employment numbers, non-farm employment change, employment numbers, and unemployment rate, employment numbers for the US at 8:30 p.m. Again, no change expected for unemployment rate, 3.8%. Non-farm employment change looking to moderate from 303 to 238, about there. And average hourly earnings looking to stay at 0.3%. If you didn't catch it, I was sharing with you wage inflation. The focus will be on that, right? The focus will be on that, whether we're going to see a jump. And you've seen that it has earlier in the year jumped up a little bit higher than we expected, and that's why towards the end of last year we saw the inflation kind of sit there a little bit. I think that we need to see this stay or maybe drop a little bit more before it's going to spur the FOMC into a little bit more decision. But right now, still nothing yet. Unfortunately, I don't think, and if I say something, and usually when I say something like that, it comes out totally different and bites me in the butt. But however, I don't think this will be a big event for tomorrow. We're not expecting big changes in numbers. It looks like it's going to come out the same or relatively similar, and we're not likely to see huge moves in the dollar, but we'll talk more about that tomorrow. Okay? All good? Makes sense? Let me know. Put it into the chat. Let me know. Isn't that mental rain like the previous one? That's good. That's good to know. Okay, let me see. Alrighty. Now, with all that said, looking at the charts, dollar index heading lower. That one we don't need anymore because it's done. We can take that away. That's done as well. Right, so these levels are all done. Take those away for now. This support level is still going to hold. We'll keep that. 50% is there, and we'll keep that previous swing low as a relevant point. And 106.40 is, oh, we spoke about that. 106.40 the last time round. Okay. So what I'm looking at here on the dollar index, drag this right across, you'll see that this support level, support area formed by these 2 points is holding prices quite well, right? It's held the dollar index up since the end of April or 25th, or since the 24th, 25th, all the way through, and it's still testing this point. What we're looking for is a possible breakdown. Right? It's been in this range. It's been in this range since for April. Came into the range in April and has been trading in this range. there is that consideration, sell it may go away, but I think that we're looking for this. If it does break down from 105.50, we could see it hit down to 105. So it's bounced back up. It's found at 38.2 level, right? So that whole drop, it's retraced right back up, tested 38.2, rejected, pushing back down. Now what you would be looking for is, now in this case, we're looking for price to break 105.50, trade down to 105.30 and 105 support level. Okay, so breakdown from this point could come down to 105.30, which is this level here, formed by that 50% retracement, and then if it does break that level, could come down to the support level here at 105. So that's what I would be looking for on the dollar. Question you might have is, could it bounce from here? Yes, it could bounce from here, but looking at the news, no big reason why it should bounce from this point. Unless we see some massively good number here on employment. But I think that even this, we'll talk more about this tomorrow, but I think even if we do, it might just bounce back up and come back down again. So for today, I think, okay, I'll put this again. Today, I would actually be looking at consolidate along 105.50. Look for price to break, could trade down to 105.30. I don't see it coming down to 105 level. Right, so we look at that. Consolidate along this point, could break down to this level, or at the most 105. Okay. Then with that said, looking at the Kiwi, that's done. We'll take that away. Now that it's bouncing back up, we don't need that anymore. Can take that away. Trend line is done. Take that away as well. Now it's pushed back up. Let's see that it's found this point. Okay, we don't need that. I'm pretty sure that if I did this, it wouldn't bother me too much. It's coming back up to that 61.8, needs to break that resistance. Okay, so what I'm looking at here on the Kiwi, it's broken past 38.2 as well, and was held at 50. Okay, so Kiwi dollar, expecting dollar weakness to come back into play. We'll be looking for a long position above this resistance level. 5959 or 59. No, okay, 5960. Stop loss, and it's coming, and it's on the way. Right, stop loss no more than 20 pips. Take profit could go up to 50 to the upside there, and then if it pushes up, you can continue trading it higher as well. Okay, that's what I'll be looking for. So Kiwi dollar 5960, 20 pip stop loss, 50 pip take profit to the upside. Hey Pips Apprentice, how you doing? So we're looking to buy at 0.5960, stop loss 20, take profit 50 to the upside. We made a good trade to the downside already. I'm happy with that. I'm considering whether it might hesitate at this level, but I think that momentum is going to push it up, so that's fine. On to the Aussie, that did not trigger our trade, so take that away. Did not bounce at that trend line. If I move this trend line here, it's valid, but it doesn't bother too much. This move down. We're now clearing 61.8. Right, so we're now clearing 61.8. I don't need that. I want that level. Don't need that either. Hang on, let me see. It came right down to 50. Okay, so we'll keep that there. Okay, take that away. Now that it's pushing up, you could trade it up. You could trade the Aussie dollar up, very similar to the Kiwi, but I just find that it's in the middle of a level. Oops. It's in the middle of a level. I have it that point. I have 61. I have a couple of swing levels here. You could trade it up, or a safer, slightly safer view might be beyond this point. Wouldn't form a channel. Okay. You could be looking at that. Nothing in here. If it breaks past that previous high, then 6590, tight stop at 20 pips, 25 I actually like, and then take profit up to 65 towards the resistance level. Up there, which is the 50% as well. Okay, so Aussie dollar, I'll be looking at 6590, 25 pip stop loss, 65 pip take profit to the upside. Right, so buy at 0.6590, stop loss 25, take profit 65 to the upside. Looking for that to drop. I'm happy with that. Okay, then on to the US yen. Right, this worked out would have worked out so nicely if I was watching it. Main thing was I did not catch this. I would have loved to have caught this trade. This was a good 270 pip move to the downside that would have played out very nicely. Did not even set the order for this because I was actually looking for it to break past that resistance, break past that 158 level before I would set a order to the downside. Unfortunately, it came right close to it, 157.96, and then on the news dropped right down. This move down, two things: dollar weakness and possibly also the BOJ taking the chance with the dollar weakness, intervening, doing another intervention to bring it down. Right, so that's why we saw it move very significantly from 157.50 down to 153, bounce back up, and then now looking like it's possibly pushing back down again. Did anyone catch the US yen to the downside for 270 pips? Please let me know. I would love to know that some of you would have caught that trade. All right, that one did not happen. Take that away. If you did, let me know. That one went down. Yes, caught that. Okay, take that away. You don't need that. And that one's done. Okay. Don't need that either. Anyone got onto the US yen? Now expecting the dollar weakness to continue, that would bring more downside on the yen. And if I showed you this, where was it? Did I write it in here? I can't remember. No. I shared it somewhere. I can't remember where I shared it now. That, you know, it's not just the yen alone. Intervention from the yen alone is not going to be enough. It needs to be a combination of yen and dollar weakness to push it lower. Now looking at this to the downside on the US yen, it came right down to 152, almost 153, bounced right back up, tested that 61.8 retracement level, and it's pushing right back down again, right? Don't do anything yet. I was sitting here. I can tell you that I was sitting here, and just then at 2 when it was pushing down. When it was pushing down, I was thinking, is it going to move? Is it going to move? I had my order here at 154.80 again. No, I had it a bit lower. 154.70. I had a 30 pip stop loss. I had a 150 pip take profit to the downside. I was looking for that move. But I saw it sit there, push down, and then bounce back up, and then I canceled that order. Right? Why I canceled that order is because I feel that it's not something that I want to set and forget, because I don't think it's going to hit and spike down. I don't think it's gonna go that way straight away, right? I think that at this point it might come down and bounce around and then go lower, you know, in that kind of fashion. So it might come down, trigger my entry and hit my stop again. That's why I haven't put that order in. What I would be looking for in this case now on the US yen, definitely below 155. I will be looking to sell it down, so 154.80. Not a set and forget kind of setup. I would go for a little bit of a wider stop at about 50 pips. I take profit down to 180, that previous low, but I will even think that it could go further towards 152. Right? Especially if we see that dollar weakness spike lower, Bank of Japan might take another opportunity to push it lower again. There was something I saw on again, let me see. There's a lot of information out, so I'm just like trying to piece it all together. There was something that it was said that there's no comment on whether intervened as usual. They never comment. There. Authorities are trying to place a 160 ceiling on the US yen, right? So that's why we're going to see if it pushes up 160, it's always going to come right back down. Maybe markets might test the BOJ's fortitude on that 160 level, but I think that, yes, like Diana is saying, for BOJ, not a big deal for intervention. US will do it for them. I think they're waiting, because I think for them to do it alone, we're likely to see that kind of move. Spike down, and then it almost immediately goes right back up. They need to have, and that kind of move, right? It spikes down and then almost immediately recovers. They need to have that kind of support, not just on the yen, but from the US dollar weakening to push it down. So that's what I'll be looking for here on the US yen. 154.80, 50 pip stop, 180 to the downside. Okay, so we're looking to sell down from 154.80, 50 pip stop, 180 to the downside. Dollar still coming back down into that support level, trying to test that. Stanford's asking, can I check the NASDAQ? I can do that. Now with that, okay, done. We take that away. Pound, dollar came down to test 38.2. Let me see. Came down to test 38.2, bounce right back up. Take that away, that did not trigger. Trend line, that way, doesn't do anything for us. Expecting that dollar weakness. We're looking for this to push up higher. You could be looking for it to go past that previous high before you look to get in. 1.2570. Stop loss would be quite wide at about 40 pips. Take profit, you have 80 in the middle there. I think that would be fair. We could definitely go up to that resistance of 130. I don't see why it will move that much yet. So I would say there. Okay, 1.2570, stop loss 40, take profit 80 to the upside for the pound dollar. 1.2570. 1.2570, stop loss 40, take profit 80 to the upside. Then onto the euro dollar, right? We were right here. We were right here on Tuesday. We said it was going to spike up, test and reject, break that trend line to the downside. It did that quite nicely, so you move that right across. It did that quite nicely. Anyone caught that trade? 45 to the downside. Now that it's done that, we don't need this. That's done. Trend line very similar to the yen, to the pound. We don't need that. Sitting at that resistance area. Looking at the Euro news. Got a whole bunch of PMI numbers that are showing some weakness, possibly going to show some weakness. Not too worried about PMI at this point. So we're looking at it along this resistance level, or rather this resistance area, formed by that 50% and that swing level. So what needs to happen is for it to break past this point to head further up. Here you have a bit of a different opportunity or split opportunity. Oh yeah, it's not yesterday, it's the day before. Yeah, right. Here you have a bit of a split opportunity, 1.0750. I want to see what happens at this resistance. We have 70 to the upside here. We have 20, 30 to the down, to the stop loss. You can be looking at that, or you can be looking at a rejection. 107.15. Stop loss 30, take profit 765 to the downside. So you're looking at that. I think there's a two opportunity depending on what happens at that resistance level. So on the euro, I would say firstly is watch the resistance level. Then you could be looking to buy at 1.07 something, 750, 30 to 70, 1.0750, stop loss 30, take profit 70, or we could be looking to sell at 1.0715, 30 to 65. 1.0715, stop loss 30, take profit 65. Right, what we're going to see is either for it to come back into here and break up, or test and reject to go down. Depends on what's going to happen at this resistance level for the euro dollar. I traded CAD from fair value on H1. I got a nice one. Very nice. I actually know one of our guys in the office here who traded on the US CAD as well. And also the US Swiss franc. Give me 1 second. Just need to send something. 1 second, guys. Okay, then on to the US Swiss franc, right? We saw that come down, test, and bounce back up. It went a lot more than we expected to the upside, pushed up all the way to the resistance level here at 9230, rejected it and pushed all the way back down. Hope some of you would have caught this, kind of trade, 30 pip stop loss, 60 pip take profit to the downside, or you look at 100 pip to the downside. Even if we're not doing a session, you might have caught something. That's our typical kind of setup. Now sitting at this point here, dollar is there. I find that this level here, how it's bounced, is quite significant. It's quite significant that it's bounced, and now it's tested and bounced back up. Yes, it is out of the Bollinger, right? It is out of the Bollinger, so we're looking at it coming back up slightly before dollar weakness could drag it back down again. Alright, so what I would be looking for in this case would be a test and reject back down. Okay, a test and reject back down. If you look at this, that would be a 38.2 level. 23 will be up there. So around this area, a test and reject, you would be looking for a selling opportunity. I don't think you should look to sell it down here because that's only a small 40 pip. You can do a tight 10 pip stop, and for that move down, I would prefer 9130, 20 pip stop, 75 to the downside. Test reject. Okay, so 9130, 20 to 75 to the downside for the Swiss. We're looking to sell, and if you just watch out on this, is that we're very dovish on the dollar. I do have the euro as a possible reversal or possible dollar strength scenario, but pretty much across the board, we're quite dovish on the dollar. 9130 stop loss, 20 take profit 75. So it all comes down to whether it's going to break this level or whether it's going to bounce, right? But I think that most likely we could see it break. Then onto the CAD, we spoke about this already. It bounced up above the trend line, broke through the trend line to the upside, testing that resistance. That was a good 55 pip move to the upside. Take that away. Now it's coming back down, breaking, looking like it's trying to break that resistance turned support level to the downside, and I kind of like that move. How can I get a text data you're running on your chart? Yeah, you can get it on the Discord channel. Thanks for that, Dinah. Looking at that, so that move up is come back down to 50. Bounce back up, test it again. Now the thing is looking for it. Bollinger Band is reasonable, looking for it to break that level Thanks, Saidu. If it breaks that point down, bullish on CAD if it holds the area for today. Yeah, it's that 50% level that it needs to hold. I am thinking, following the trend, trending scenarios, I'm looking for it to break down. I'll be looking at below 1.37, right? 1.3695, stop loss 20, take profit. We have a 60 pip move to the downside. If it closes below this point, what I think could happen is that it will trade down, bounce back up, and then hit lower. If it doesn't break, then it could trade back up. I'm not super keen on it trading back up, especially if we see the dollar weaken. But I guess, again, at this point, you will have that opportunity. 1.3730. Stop loss would be about 25 pips. And take profit would be about 50 pips to the upside. So you do have that, again, at the current support level. Back down. Which one do I like better? I would like thinking about that possibly breaking, but I think there's, as much as we have a lot of dovish views, I'll put these two options there for the CAD. Right, so it's at the support level. So we're looking to buy, no, looking to sell if it breaks the support at 1.3695, 20 to 60. 1.3695, stop loss 20, take profit 60, or we're looking to buy it up from 1.37 something, 30, 25 to 50. Stop loss 25, take profit 50. It all comes down to the reaction at that support level. Look at the dollar again, finding support, looking like it's trying to push back up, but I think it's still quite early. We want to see what happens through the Euro session and into the US session before we get a clear indication of whether it's going to break or bounce from this point. Okay, yeah, yen is just sitting there. Then through to gold. Jimmy was sharing this after the session on Tuesday, that at this 2300 level, a lot of orders. He was expecting that it was going to test this area and bounce up. Happened exactly as he had expected. Bounced off 2300, now retracing back down. Again, what you'll notice here is dollar pushing lower and gold pushing lower as well, right? Looking like it's pushing lower. So again, we said this on Tuesday, gold needs to break 2300 to trade down to 2266. I would maintain that same view with that dotted line there. So it needs to break 2300, 2282, and then 2266. I would say 2282 first. Okay. Yes, I did write something about Bitcoin there. That was on the weekly view. Boost my post. Remember to boost it if you read it. It's dropped a lot yesterday. It's dropped a lot since its high of 73,778. Coming back down now, there is a support area here formed along 51,000 to 56,000. If it breaks that level, could hit lower, but ultimately looking for a possible bounce from this point, or if it breaks and possible bounce. I think this is very unlikely. I think it's very unlikely it's going to come back down to January's level. But with crypto, you never know. But we're looking at a possible bounce or buying opportunities from these two levels. 56,500, 56,500. Yes, right there, coming close to that point now. It could come down a little bit lower, but ultimately I'm not looking to sell it down. I'll be looking to buy it back up. Okay. And then on to the US. Let's just cover the different ones. 10-year yield is heading down. 500, US 500, it's sitting right there. Wait, let's go back to SPX first. Pushing lower. It's a bit odd that it should be pushing up. We're looking on H4. Possibly needs to break past that point. That's going to hold it, I think. So on the SPX, on the 4-hour time frame, I like looking at it on a slightly larger time frame. 4,900 might hold prices. We might see it come back down to test and bounce, similar to what it did there and there. On to the NASDAQ, very similar patterns. Or the similar thing is going to move down, support. I don't have any particular views. I actually find that it's disjointed right now because as we see this push, as we see the dollar index push down, we should be looking at equities pushing up, but it's not doing that exactly right now. Right, it's actually sitting down and actually pushing a bit lower. So I do feel that there's a retrace to find a support and then looking for it to bounce back up. Okay, not a lot to say there about the equity side for Stanford, but if you have any particular questions, put it into the Discord group. I'll be happy to look more into that for you. And with all that said, we're in a holding pattern right now. Everything looks like it's on the way, but it's just sitting at its current level to continue moving. Looking for a continuation, but still consolidating at its current level. Okay, so again, if you can help me out massively, do remember to click that like and subscribe button. If you haven't already, the link for the Discord channel is there. Please remember to join, and I will see you all tomorrow, same time, same place. Take care now. Thanks, everyone.